Hello guys, today's video is actually an explosive trade I took on EURCAD, securing a 650 pips profit with a perfect sniper. The sell was an explosive one and all my entry criteria were met. And of course, I'm also going to show you my proof of trade, my proof of entry. Without wasting much of our time, let us move into the chart and see the breakdown. It was too sweet a trade. All right, guys, let's quickly check the chart of EURCAD. We secured a full move of 650 pips sell, actually. It was a pretty much easy setup, and my entry criteria were met. And what were my entry criteria? Of course, structure for this trade, structure, momentum, liquidity inducement, then true supply. And of course, I did a top-down analysis that is going to as high as the monthly time frame to check the general structure of the market, then streamlining down to a more lower time frame until my eventual entry at the 10 minutes time frame. So let us do a top-down analysis for this trade so that you can see clearly how simple this sell trade was for us. All right, so let me quickly delete this and move into the chart proper. All right, so let me quickly go to my monthly time frame for my top-down analysis. All right, okay, this is my monthly time frame. From what I can see here, I discovered that the monthly time frame is bullish. We can see market forming high, higher high, higher low, higher high, higher low, higher high, higher low, lower high. Now, I don't want you to feel structure has broken here. Of course, for an upward trend market structure, the lows sustain the trend. That means if the low is not broken, we cannot say that structure have been moved to the downside. The high might be taken out and might not. Of course, market forms higher highs and higher lows. But what sustains the trend for an uptrend are the lows, and what sustains the trend for a downtrend are the highs. So the fact that we have formed a lower high here does not mean that structure is broken, and the market started retracing back. So I got very interested in this trade around here, and let me tell you why. This is the reason. Number one, structure is not yet broken, and market is already witnessing a very good and full retracement. Now, since structure is not broken yet, this low has not been taken out, I am not so sure what market wants to do. But what I know is that for this retracement to have come to this level, it simply means that this demand is going to be a decision point for the market. That simply means that we can actually expect markets to maybe come to this demand, do not clear this demand, then tap higher to go and form a higher high. Or we can have market break this demand. Once this demand is broken, this demand I have right here, once it's broken, it simply means that we are now bearish. So we can just expect a complex pullback, then we can now continue to the downside. So I was pretty much sure that for the fact that this move from here didn't create a new high, we don't know if the upward market structure is still maintained, or the movement of market down here is to come and clear this low. We don't know, but of course it will definitely come to this demand, and the decision points will be known here. So that was why I was so much interested in this sell, that once I am able to catch a sell here, I can swing the sell here down to this monthly low that we have. So, and this low became very interesting to me because this complex pullback the monthly time frame was experiencing from this very great momentum created an inducement low here for this demand. So it makes me realize that, oh, this demand is actually coming to be tested, either to be broken or to be used to push price higher. So let me go down to a more lower time frame. But from my monthly perspective, I can see this very big momentum candle here. This very big momentum candle. It simply means that momentum is bearish. We can see what just one candle gave us about. Let me see. Just one candle gave us about like 620 something pips, and we're not having a lot of candles before we even pull back. This is one of my confirmations to once momentum is in the downward direction, that simply means that market is strongly bearish. So all this move that we have here is just a complex pullback before market will continue down to this decision demand here that I have. So I was just looking for an opportunity to catch this trade, and I saw something very interesting. Of course, this is this current month that we are in. This was the previous month, and this was last 2 months. And this move got me very interested in this trade because I can see that last month wicked out the last 2 months, wicked out the high of last 2 months. That simply means that liquidity was taken. It simply means that liquidity was taken. So I was very much interested in this little wick out, that we have here. Okay, in this little wick out that we have here. So let me go to a more lower time frame to see more candle data. Of course, I have seen that I am looking for a sell. I'm currently bearish. So let me go to a more lower time frame and see what I have. Okay, pretty much interesting trade. Now, I have seen a very nice thing right here. Okay, so I saw what happened here. Look at this high. Look at this high. This is actually an inducement high for this supply that we have here. So wherever I have a liquidity before a zone, it makes that zone very much likely to be used. So this was my last set to buy to sell candle. This is my zone on the 4-hour. So I want to see if markets will tap into this zone. But of course, there is an inducement high here. If you want to know more about inducement and some of the terminologies that I use here, you definitely have to subscribe to my mentorship. And the link will be in the description box of this video. So there's an inducement high here, which makes this supply to be valid to me. I want to see if market will mitigate it. And immediately market mitigated it, I became so extremely sure of the trade. So we have an inducement high here. And let's see what happened right here. Market traded back very close to this supply. Of course, with the same level as this previous inducement high that we have here, the market traded away from it. So this simply means that I have liquidity just before this supply to be grabbed. I have liquidity. I have liquidity here. I have liquidity here. Now, immediately, these two highs were taken out and the market tapped into my supply. A market tapped into my supply. I became very much interested in the trade. Let me remove this one that I put from the monthly. So we can see that markets took out those highs and mitigated that supply. Then market sold. So I became so very interested in this trade. Now, for the fact that liquidity was taken out, it simply means that the banks were present. So that means around here, if I should go and check a more lower time frame, I'll discover that around here there will be a buy to sell candle, There will definitely be an order block here before this move import, before this expansion here, and market will have to retrace back there so that the bank can mitigate their orders. So here, for the bank to actually take out liquidity, to take out this liquidity and the liquidity I showed you here, for the bank to take out this liquidity right here, they will have to what? They will have to buy. That is to push price up to clear this liquidity. So that simply means that all this move down here, the banks were in a very much drawdown. They were very much in a drawdown, rather. The banks were very much in a drawdown because they had to buy here to take out this liquidity. So they are very much in a drawdown. Definitely the bank, they don't lose. They are the one that control the market. They will definitely trade back into the buy to sell candle that we have here so that they can what? They can close their buy trades that they were in a very much drawdown. They will close their buy trade so that they can now mitigate this supply here and move further down. So I became very much interested in this supply that I have here that has grabbed liquidity. So I had to go to a more lower time frame to see what I have right there. So I went to my 10 minutes and I spotted my zone. I went to my 10 minutes. Let me show you what I have for my 10 minutes. I went to my 10 minutes, and one of the reasons why people don't trade accurately is because they don't zoom. I like zooming a lot to see exactly what I am looking for. So I can see some very nice formations of the 10 minutes. I took my trade off the 10 minutes. So I can see some very nice structures. All right. So on the 10 minutes, I was having high, low, higher high, higher low, higher high, higher low, higher high. And of course, before we traded down, before we had a lower low, like we had an expansion to the downside. So this simply means that on the lower time frame, my structure has been broken already. So what was the last buy to sell candle on the 10 minutes that is very pure, that I can see there? All right, I can see my last, can you see this, my last push-up candle before market traded down, before market expressed this expansion. So I took my Fibonacci retracement, I took it from the swing high to the swing low, and of course I took my horizontal ray and I put it at my equilibrium price, which is my 50%. So that was where I was waiting to snipe this trade. Pretty much simple. So I just know that bank will trade back there to close their buy order so that they can mitigate it and move in their direction. Of course, they successfully ran the stops, so they have to move. So that was where I set my limit, 1.50961. And then my stop loss was just above that other block, just 6 pips. My stop loss was just 6 pips. I don't want to go into so much details because whatever we have here are meant for the consumption of my mentees. So I was just waiting for price to move back into that zone so that I can actually sell. And my stop loss was just like what I said, my stop loss was just 6 pips, just above the other block right there. Just 6 pips stop loss. So this was 6 pips stop loss. And I need to see how the market will play out. So let me press the play button and see what actually transpired right there. Price went and activated. It was a perfect sniper, a perfect sniper. I love sniper trades. So what was my first target? I got very much interested in this demand that I have here. Why? Because there is an inducement low before this demand. So market could actually tap into this demand and buy. But I was pretty much sure, according to my monthly time frame, that market was going down. Look at the target for my, okay, according to my weekly, let me show you the target for my weekly. So look at the target for my weekly. I have, of course, this was where I started the trade. And this is my sell to buy candle on the weekly. So I targeted the imbalance that I have here. So this was my final target according to the weekly time frame. I'm pretty sure that market will definitely come and clear all these lows. Market is done grabbing liquidity to the upside and it's heading for the liquidity down here. Market is heading for the liquidity down here. All the liquidity stored here, market is heading for it. Market is heading for those liquidity. All right, so, and that was my final target on the daily. It was around, let's see, like 651 pips, 650 pips thereabout. So let's go back to my 1 hour. Let me show you what happened next. All right, so this was the first take profits for my signal, for my mentees rather. So the first take profit. I was so very much interested in this demand right here because there's an inducement low. So we're going to be taking partials here. And the next, my next take profits was here. So this was a 330 pips. I guess, I think I can remember. So this is a 330 pips. This is a 420 pips. I am my final target. And my final target was 650 pips. I wanted to see all these figures correctly. So my final target was 650 pips. So this was my final target. That was where I was waiting for me to finally close trade, my final target. So this was my final target, 650 pips, 650 pips. So I want us to see how price played out. I want us to see how price played out. So market never returned there again. It never returned there. I was so very, very confident of this trade and I held it. And definitely I'm going to be showing you my proof of trade. So price kept going down and kept going down. Pretty much simple trade. Discovered momentum was to the downside, structure, liquidity inducement, and of course my true supply. And I took this trade and can see how bearish this trade was. And it finally hit my target right there. 650 pips, guys. No joke, 650 pips. 650 pips. Let me show you the trade. Let me show you the trade. So this was the trade just when I called it. This was the trade just when I called it. This was when market smashed our TP1 and heading towards TP2. And of course, market smashed our TP2 of 420 pips. You can see the entry, guys, the entry. You can see the entry, 420 pips. And finally, market got to my final destination. You can see this is 330 pips. This is 420 pips. And this is my monthly final target of 650 pips. And this was the markup for the trade. And this is my proof of entry, guys. No jokes. I am the sniper king. I am the pips lord. Look at my entry, guys. Look at my entry. This is a 1 hour. Look at my entry. Look at my entry. This is no jokes. And I held this trade. I secured a full move on this trade. I secured a full move on this trade. So guys, this is the trade that I took. And I want to believe that it was pretty much understandable. It's so easy, guys. It's so easy. The foreign exchange market is not difficult. Once you understand structure, liquidity inducement, you understand true demand and supply, and you have your psychology intact, there is nothing you can't do in this market. There is nothing you can do in this market. And I'm so sorry that I've gone as deep as I can for the video, or I go as deep as I can for my video. But at the same time, I do not say every single thing. I do not say every single thing. All my trades are always sniper entries. If you know that you are very much interested in taking your institutional knowledge further, or you want to be profitable in this thing, guys, there is link in this description. You have to sign up for my mentorship and you would definitely get a very, very, very good value for it. And of course, if you have not subscribed to my YouTube channel, ensure that you click the subscribe button right now and turn on the notification, like this video, share this video, let it reach the uttermost part of the world. So guys, thank you so much for watching this video, and I hope it was very, very much educational. And besides, do ensure that you go through the disclaimer at the start of this video so that you can know the risk that is involved in the foreign exchange market. Once again, I remain Mr. Pick.